Okay, I'm David Lowe, president of the Downtown Sarasota Condominium Association. Welcome to our workshop this afternoon, Condominiums and Prices, possibly better said, how healthy is your business? This workshop, part of DSCA's commitment to providing information to our members and community at large. This, whether it be for safety, population, economic, or other facts and data that helps our city make wiser choices for today and our future. Today we have a great presentation lined up with our own DSCA associate members serving as panelists, and thanks to the panelists in advance for their time and expertise. Our moderator will be Jeff McDuffie of Lighthouse Properties Management. So let me turn it over to Jeff, and thank you again for moderating our event.
Thank you, David. I think people have forgotten how to do live events, David. You have to say, would you please mute upon entry into the meeting. That's how it works these days. Aren't you guys glad not to be doing a Zoom meeting today? We were, the last one of these that I served as a panelist on, I was telling Dave McMahon earlier, when it came my time to talk on 2 separate occasions, you ever have that situation where your mouse disappears while you're trying to unmute yourself? I had that happen twice. So the people are like, Jeff, this is your question. Yes, I know, I can't find my mouse. It's not working anymore. So I'm glad for this to be a live meeting. I was actually up in Atlanta this past weekend visiting my son and daughter-in-law, and we were talking over dinner one night about what do you guys have going on in the coming week. And I told them, well, I've got this event that I'm moderating. And they said, oh, wow, that sounds really cool. What is it? And I said, well, it's with the DSCA, Downtown Sarasota Condominium Association. And they said, well, what's it about? I said, well, it's called Condominiums in Crisis. And they kind of looked at me and okay. So no, you know, we're talking about the double-digit increases in insurance premiums and the collapse of the Surfside building and labor shortages and material shortages and all that stuff. And those of me said, wow, you are a buzzkill. You need to work on that a little bit because that is, sorry, we're going to miss that one. So as a result of that conversation, I'm like, okay, I want to assure you, if you're here today and listening, yeah, we're going to set the stage on kind of the reality of the market right now, but we're going to spend a lot of time on the solution side of things as well and offer up some best practices, some proactive solutions to help you overcome some of these crises that we're experiencing in this industry. As David mentioned, I'm Jeff McDuffie. I'm the president of Lighthouse Property Management, also one of the Downtown Sarasota Condominium Association Platinum Associate members. And we have an excellent group of panelists today that are going to share their knowledge and expertise, their best practices on some of the crises that you're facing today. So, Michael, you want to start off with introducing yourself?
Good evening, everybody. My name is Michael York. As mentioned, I am the Director of Business Development and Marketing for Forge Engineering. We are a division of Socotech Consulting, so we're one of the largest national companies with 400 plus engineers and architects on staff, in addition to about 8,600 other employees internationally. Our specific division focuses directly on HOAs, high-rise, mid-rise, and low-rise, acting as your owner's authorized representatives for painting, concrete restoration, waterproofing, structural condition assessments, reserve studies, etc. And thank you for having us, Jeff, and thank you for everybody for coming out this evening.
David, can you hear me? Got it, thank you. Dave McMahon, Atlas Insurance, senior producer with a specialty in community associations. When I had given my kids my business card and they saw senior, they actually said I'm not that old, but I feel like I am when it comes to this marketplace, and we'll talk about that in the near future.
My name is Doug Christie. I'm an attorney. I'm board certified in condominium and plan development law. I routinely represent associations in a variety of litigation, compliance, governing document, and corporate matters. I practice out of my home here in Sarasota. I've regularly represented condominium associations, homeowners associations, master plan communities, and even commercial property owners associations in a variety of manners, and I'm pleased to be able to share some information with you all today.
Hi, my name is Bradley Rothenberg. I'm an attorney with Angus and Terry. We specialize in construction defect litigation. That's all we do. I've been practicing over 20 years in South Florida. I have a varied practice history. I've worked on corporate and securities matters, done a little liquor law. I did plenty of condominium and HOA transactional law, and now I'm working for Angus and Terry doing solely construction defect law. So I'm anxious to share that knowledge with you, and this looks like a great program.
Well, thank you all for being here. We look forward to everything you have to say. I want everybody for just a moment to think back to all that we've experienced since the beginning of 2020. Right, so we had COVID and the impact that that had on your community association, both at a human level as well as at a financial level. Then we had the double-digit insurance premium increases that we've all had to deal with, and then the building collapse at Surfside and all the challenges that presented to those of you who are living primarily in the high-rises in this area. Then we had the Category 4 and 5 storms that hit our country in this summer. That's a lot to go through in a short period of time. And to one degree or another, we're going to touch on all of those things and the impact that they're having on you as a community association, you as a condominium, what's going on with your budget, how to address those things. But let's start off with Dave McMahon and talk a little bit about insurance and the impact that all of this has had on insurance. And what is the current state of the market for insurance and even looking into 2022?
Right, a lot to talk about here. I'm trying to put it into brief notes, but it's going to be tough. At the end of the day, when I took a look at all renewals starting in January, and we insure over 500 associations in the Tri-County community, if you will, Manatee and Sarasota and Charlotte, average increases have been anywhere from 16 to 20%. But it's not uncommon to deliver a 50, 60% increase as you get closer to the water. And it's something that we haven't even seen. And again, for those that might have witnessed 2004 and 5, when Hurricane Charlie and Jean and Francis and Wilma and Rita danced through our state. For those that have seen this, in that period of time, I'd say this is even worse. And some would even say it's about the Hurricane Andrew type experience because of all the other things that are going on. Now, there's a couple reasons for this. Let's walk through them, right? And outside of the fact that Florida is a catastrophic state, for the obvious reasons, we work through a lot of issues related to two words, severity and frequency. Okay, severity and frequency are very important concepts when it comes to what we endure. And if you just think about it, and remember what's critical about this, and I answer this question a lot, I get this question a lot, it's just not about Florida. It's about the United States. It's about international. And so we dealt with the historic wildfires out west. That's unprecedented. A typical wildfire season might be $2 to $3 billion worth of damage. We're getting to the point where it's $15 or $20 billion worth of damage. And that's becoming more consistent recently. If you look at the series of hurricanes in 2017, 3 of them rank in the top 10, just in 2017. For those that may not have ever heard of the Iowa derecho, a derecho is basically a hurricane on land. And if anybody want to look that up, it's devastating what happened to Iowa with that storm. And then, as we all know, and we have seen, and we deal with this, who's paying for the civil unrest? Someone's paying for that damage. Business owners, business lost business income. Okay, and then you add on something like the Houston ice storm. And all of this has happened, really, just that period of time, and there's more, but that's just a sampling that's happened in the last five years. So when you deal with frequency and severity, we've dealt with a pretty significant event that impact rates without question. Now, there is semi-controllable variables. What I told you about Mother Nature was uncontrollable. Okay? We also have what's known as creep loss. Okay? Those are losses that are filed years after an event, and we have known as social inflation or litigation costs. Okay, that add to the expense of insurance. And let me just segue a little bit and give you a stat. Pretty interesting. This is 2019 data, although it will be annualized for 2020 in the near future. We look backwards, the Florida Office of Insurance Regulation looked backward in 2019. In Florida, we represent about 8% of the claims in the United States, but we represent 76% of lawsuits filed. It's just we are a litigious state, okay? And because of that, you're adding what's known as a social inflation, inflation for litigation costs that impact insurance rates, and also creep loss. After an event, years after an event, a claim would be put in, and you might have seen the news, the newspapers that talk about maybe unsavory practices of knocking on doors looking for opportunities to replace roofs in the industry of contractors. And not everybody's doing it, but it doesn't take a lot of bad apples to make rates increase on top of the severity and frequency of what we already dealt with. So how do we know? Like, what's a leverage point for us? Citizens, which is all of us, but Citizens is a carrier of last resort. They are a opportunity to go to them when there's not another carrier that would serve the purpose of insuring the community. And essentially, because they're the last resort, we don't want to go to them. We know the marketplace is working well when we're not going to them. And they got about 400,000 policies starting in the beginning of the year, and we're going to double that. We're going to go from 400,000 to about 800,000. And it will trend and continue to trend upward. We know at that point the system's broken. Something's wrong, and they're running to get help because nobody else wants to help them. And at that point in time, it throws us off because we must understand that Citizens is not there as a permanent stop. They're temporary housing for insurance. They don't want your business. Now keep in mind, it's nothing personal. There's nothing personal about not wanting your business, but it indicates that the market, if they don't get it, is working correctly. When everybody's flooding to them, the market's out of whack, it's out of balance. And that's what we're experiencing now because of an intense period of severe and frequent storms and events in the United States worldwide, creep loss, social inflation, and it's put us on our knees. And some of the elders in insurance would suggest it's as bad as it was, or as is, reflecting on Hurricane Andrew, okay, that hit in 1993. And you have carriers picking up their sand toys and leaving. So essentially, these lawsuits, this creep loss, puts a tax on you, on every unit owner, trying to find insurance because we have to pay for that along with what Mother Nature is going to do. And we don't control Mother Nature. Okay? So the combination of all of that is mixed into a milkshake. And at this point in time, I feel like Darth Vader because I'm dropping insurance increases that we haven't seen in a long, long time.
Thanks. I know the state legislature took some steps earlier this year to try to address some of the things you just talked about, the creep loss, the litigation issue here in the state of Florida. And Governor DeSantis signed SB 76 into law earlier this year, went into effect July 1st. Doug, tell us a little bit about what SB 76 is, how it addresses litigation costs.
Sure, thanks, Jeff. So, yeah, went into effect July 1st, and it essentially, to piggyback on what Dave said, it regulates some of these players in the industry in an attempt to either control costs or shorten the period for things like the creep loss. So, for example, Dave mentioned contractors knocking on doors. There's certain practices now that are prohibited, limitations on solicitation, limitations on giving gifts to get your business. There's additional regulation now on public adjusters. I'm sure you all know what a public adjuster is. They're out there to benefit the potential claimant on an insurance policy in the event there's a dispute between the insured and their insurer, but they make money because of how they get paid and how that structure works. They're a little bit further regulated. I believe the time period for making claims was shortened. I think it went down to 3 years. I don't recall what it was before that. And additional disclosures in contracts. So essentially, from my perspective and how I would characterize the changes, is essentially the Florida legislature although there were some direct regulations on insurers as well, insurers are now required to report open claims and closed claims within a certain period of time, so that's public information in terms of whether they're actually acting in good faith to close claims or if they're actually still disputing claims, and that's obviously some measure of what they're doing in terms of claims and how diligently they're pursuing them. I know there was a substantial period of time when claims in the Panhandle weren't getting processed quickly. So, and then all of those regulations cumulatively are intended to cut down on what are actual or perceived problems in the industry that are leading to things like the creep loss or the social inflation, the claims that basically result in payouts that insurers may have otherwise not made and raise the costs, and therefore those costs get passed back on to you all as consumers at the end of the day.
And you referenced the 3-year limit in terms of filing claims for hurricane damage, and that's something that's been in the statutes for a while. I think SB 76 addressed or extended that provision to cover other claims as well, right, Dave? Is that correct?
Yeah, there's multiple. Sorry about that. I'll figure it out sooner or later. But there's multiple elements to a claim. Generically, we just know as a claim is a claim. I filed a claim. And many times, it should be managed and managed effectively. But we also have claims that are reopened. Okay? And we also have supplemental claims. Now, reopened claims are additional costs for the loss. We had to reopen it. We actually had more costs than we anticipated, and that's understood. We also have supplemental claims where actually there's an additional loss from the original event. It's an add-on damage to what we thought existed in the original claim. Now keep in mind, what we're trying to do is shorten that time period. We're trying to get to the point where there's a process. So for reopened claims, it's within 2 years, supplemental claims within 3 years. And then if there is, the insurer wants to litigate, there's a 10-day window where they have to make sure everybody understands they're raising their hand and they're going to litigate. Then there's a period of time in which the carrier needs to respond to that. So the claim, by the insurer, they have certain things they need to do. They have to make sure they are open to the claim investigation. They provide the records, okay? They're up-to-date estimates, these sort of things. The insurer needs to make sure their time frame is tighter in terms of how you would handle litigation, offering them a denial, acceptance of the claim, and maybe a discussion of how the claim will be handled. So let's say I accept it, but I don't accept the value of the claim. And there's a disagreement. We'll go to arbitration for that. And they're trying to close that gap of how long that will take. Remember, severity and frequency are uncontrollable. What we're trying to do is moderate the controllable element of social inflation, of creep loss. We're trying to moderate that because we're trying to reduce 76% of claims in the state of Florida. We're not going to eliminate them. Some of them are very fair, very real, very necessary. But they don't have to be that high. We don't have to have the ratio so distorted. So the claim process through SB 76 is to try to mitigate that in order to everybody have a timetable, and also that there is a scale on what the legal profession would receive through this litigation process. And that will hopefully help, not eliminate, but help drop the ratio that we're trying to keep the hidden tax from you so we can lower the rates, because we cannot control Mother Nature, right? But we can try to control some of the chaos that's existing within claims. That's what we're trying to do. Or at least that's what the law tries to do.
How much time do we anticipate passing before the impact of that law is felt?
Well, it's interesting because I put in my notes here, the full impact of the new litigation remains to be seen, right? So, unfortunately, what we have seen, and where do we see this? Assignments of benefits. When we saw some law against assignment of benefits, it took about a year to understand, was it effective or not? There's great intent to what's going on. We just now have to live it. And it will take a year to flush out. In the world of hard markets where rates are skyrocketing, and quite frankly, they might even get worse before they get better. And that's scary enough as it is. In that, a hard market would last between 2 to 4 years. So we still might have some pain to go through. If this legislation kicks off and does well, it might help everybody in this room. All those that are servicing clients just like I am. There's Brown & Brown, there's CBiz, there's Golf. We're all trying to do this for you. We really don't like bringing these increases that extensive to the table. It doesn't help anybody. So we might have another year and a half to figure this out. But I haven't seen legislation statistics to suggest that it will happen tomorrow. It will probably take a year.
Yeah, and I think staying on that same theme, I think insurance premiums, rates, increases, decreases, because we did see a period of time where there were decreases. It's all a little bit of a mystery to most of us. You know, we kind of look at the events that happen immediately. So we know about the storms that happened this summer.
Yeah.
And so the question is, oh, is that going to cause our rates to go up? Is that what's causing our rates to go up? So a little bit of a two-part question, and this will turn our attention in another direction as well. First part is, what can we expect next year, looking a year ahead, in terms of rates? And then, is the storm in the Gulf that happened earlier this year going to impact this year's rates, or is that sometime in the future?
You know, I actually thought that the potential of the increase in rates might have been quick and drastic, but we've gotten over it. So in other words, the 40, 30, 20% rate increase climbed the mountain, and then things might have settled a little bit. I'm not seeing that. And so Ida did cause a lot of problems. Where it will be ranked in the top 10, I don't know. But again, what are we seeing? It hits the Gulf and then shoots up to the northeast and punishes the northeast. So these things are very unique. What I do know, to give you an insight, there's a concept known as reinsurance. Insurance carriers that insure insurance carriers. We need that. It's worldwide, and it's the basis for why we can exist in a normal platform to provide insurance to you, because we have reinsurance carriers. But just recently, just not that long ago, American Capital went into receivership. Weston Wind provides wind policies. They canceled many of them. Great American is exiting Florida. The carriers are shrinking their appetite. Rather than 2% hurricane deductibles, they're increasing them to 5% and adding on a 15-20% increase. It puts people in this room that provide insurance will run around with their heads cut off trying to find replacement coverage. It's very difficult. So the projection in my eyes is anywhere, I would start anywhere from 16 to 20%. But this is what has changed. Back in 2004 and 5, it was very generic, the rate increase. Now it's granular. Technology has provided an opportunity to look at age, location, type, high-rise, garden-style, mid-rise, maintenance records, okay, roof replacement history through mitigation reports, claim history. Everything now begins to add up. Filing the appropriate claims, mitigation reports, all these things. And now you become who you are. Are you built 1980 on slab on the water, 10 stories high? Or you built on the water in 2005? Do you have your maintenance logs to show everything that you've done? And I've been saying it for a long time, prior to even Surfside. If you're an older community and you're a high-rise, plumbing, electrical, roofing, windows, sliders, you've got to have your maintenance logs. If we're out there to try to make you look good, you have to help us make you look good. And so those communities that have that investment log, we can go to the carrier and say, accept them. Model them a little bit differently than you would for someone who doesn't. So all of this being said, you are not a generic number. You are, and you represent based upon your age, location, claim history, etc., etc.
You know, I've got probably a dozen more questions for you along this line, but we'll jump off of insurance for a moment. Talk for a little bit about what type of mandates you expect to see as it affects insurance pertaining to the Surfside, the building collapse.
Yeah, great question. I was hoping I could avoid it. It's a painful one. Let me tell you what immediately happened about a month later. Some carriers went to, we're canceling, upon renewal, we're going to cancel the policy. We're not doing anything 5 stories or more. Others are going to ACV, actual cash value on the roof. Rather than paying you dollar for dollar, we're going to pay you 50 cents on the dollar depending upon where your life cycle of that roof. Some appetites, they're just walking away. I'll pick up my sand toys and I go insulate, more insular, 3, 4, 5 miles away from the water. So it's a melting pot of differences, but all of us are dealing with the same thing. When it's this difficult, I can count almost on one hand those carriers that are participating. Other ones for high rises are running away. And I can't say it enough. If you're investing in your high rise, you better keep the data. The warranties, the contractors, the amount of investment, we may need that. Because if you're equal to somebody else, you might just get the benefit because you had all that information if an underwriter had to pick you versus somebody else. Make sense? So
Yeah,
that's kind of where we're at.
Yep, that's great information. So there's obviously new underwriting standards associated with the collapse of the building in Surfside and all that's triggered. Michael, what do we need to know about this whole topic of building inspections and how that comes into play for not only aging buildings? You know, we've got downtown buildings that were built back in the maybe in the 60s, certainly in the early 70s, as well as some brand new ones. What type of inspection should they be getting?
Yeah, absolutely. That's a great question. So from inspection standpoints, there's, we start as part of our company, very few offer this, but starting in the built environment, while the building is being erected, we have probably 7 to 8 threshold inspectors on staff, which is quite significant in this market. They're hard to come by, highly trained individuals, both male and female, and we are on site daily and log in a very drastic fashion every little detail that you can imagine to make sure the components, the specifications, the workmanship is all being performed in accordance with the blueprints that the architect and the structural engineer have designed it to. But moving on from there, and that goes through the life cycle of the building, including construction material testing. So we test, we do welding test, and we do concrete test as well to make sure that those mixtures are poured correctly. But the building inspections, there's about 4 different building inspections. So you have a turnover, first and foremost, a turnover inspection. This is imperative. A lot of boards just decide, well, we're new, we don't want to pay for that, we don't want to go to our owners, and you need to move away from that mindset. You need to go to the ownership and provide yourselves with a neutral third-party turnover study. This is typically done by an engineer. There's 13 components that are typically run through in here, although, if we're doing it, we do a more investigative approach than just those 13. And that would lead into a reserve study, which should be done simultaneously. The turnover study, though, would help any warranty items, any poor workmanship, materials, defective items that are being used, like waterproofing, for example, roofing would be another one. And through this point, we can provide you that turnover report. We have a discussion with the board, and then we would move to somebody like Angus and Terry, who would pursue the 558 claim if these items were not rectified at that time. And they move to sort of a pre-litigation period where they serve the developer with a notice, and it goes through a more legal battle that way, put some pressure on them. The reserves are extremely important. There's 2 different types of reserve studies. They're both okay, but we just believe that the boards and the association members and the managers need to understand the difference between the 2. There's a forensic analysis and there's a general accounting analysis. The general accounting analysis will be performed by specialists, advisors, consultants, whatever their terminology is at that point. But they are not professional engineers, or a lot of times they're not associated in the state of Florida. You'll see them from California, Texas, Illinois, New York, etc. And they're using national averages as far as your assets are concerned for the remaining useful life and the anticipated replacement cost. And this is very detrimental, especially to building. Most of you are all from this area, downtown Sarasota. And when you put it into a mid-rise to a high-rise format, these the anticipated replacement cost, if you're using a national average for, say, painting, for example, or roofing, for example, can be very burdensome for the board itself. They could be half funded when they believe that they're supposedly fully funded at that time. We've seen some recently where the roof expectancies are 40 years. Typically your roof expectancies are 20 years around here. So when using a national average, it can be very detrimental to the board. The forensic analysis performed by an engineer takes into account, we're going to walk through the building, we're going to list all of your assets in their totality. We break them out component by component, put them into a 12-month window of remaining useful life, and then we use localized data from projects, and we perform more than 1,000 per year. So you have, a good number at that given point. Okay, now if you wait 10 years, it may not be relevant anymore. But we give you a localized data of what that paint's going to cost, what the waterproofing is going to cost, with labor included, the roofing, seawalls, paving, concrete restoration, etc. The next one we're going to move into is the structural condition assessments. A lot of people have heard the term recertification process. The recertification process came out of Miami-Dade in Broward County. There was a DEA building that had fallen quite a few years ago in a parking garage. The state does not, and let me go back to the reserves for one second. We're the only state, by the way, not the only state, but we do not have a requirement for reserve studies to be performed. You have a requirement to have certain reserves for certain items, okay? But you're not required to have a reserve study, which is kind of insane. The state of Alaska requires a full reserve study every year, okay? Which sort of leads me into the next point, the structural condition assessments. That's what we refer to in the business, and Miami-Dade and Broward refer to as the recertification process. The structural condition assessments that we perform are much thorough and probably more investigative than what their requirements are, but you'll likely see this come through legislation here shortly, probably in a 15-year window instead of 40-year, and it'll probably be a statewide thing, okay? So you better start preparing for that. This is a thorough analysis of the interior. I want you all to write that down, interior and exterior. And it's important when you get these proposals to evaluate the scope of work, because we believe in the thorough analysis of the building in its totality, where some of our competitors and some of the industry professionals are taking shortcuts to make a quick dollar off of you guys, okay? Because it's an uneducated process right now. We haven't dealt with this before. We have, but the boards haven't. So you really need to pay attention to that scope of work on the structural condition assessment. It'll probably go down to 15 years is what we're looking for. And we're looking for things like shifting in the building, settling in the building. We're looking to see what type of condition your waterproofing is on your balconies, elevated pool decks, parking garages. We're looking for the cracking in the building. What pattern is that cracking in? Where is it located? How thick is it? For example, we're looking for concrete spalling, so exposed rebar or cracking where that concrete has fallen from the building. We're looking for blistering. We're checking the sealant around your windows. So we're going soup to nuts, top to bottom in the building to make sure that it's structurally sound. This process it takes about 2 days, and the report takes about a month to put together. So if you're looking for a 2-hour visual inspection from the ground floor, it's important for you guys to understand what you're paying for at that time, and that it's not that investigative, and you could still have some liability there from the board standpoint. And the last one would be the weekly or monthly inspections. You guys really need to incorporate either a committee or the manager. The managers have enough to do, so I hate to use them for this, but they need to be educated on the condition of the building. And you need to be looking at things like for things like concrete spalling, cracking sealants around your windows or sliding glass doors or entry points, blistering of the paint, for example, signs of rust that have from water intrusion that have cascaded down the building, effervescence coming from some of the stucco areas or porous banding, EFIS systems that you guys have for decorative purposes. So this will be a very strict law coming forward, statute that I think we'll put together here pretty quickly, but probably 15 years is what we're looking at.
So a question on the structural inspections, because I think in the aftermath of the Surfside collapse, a lot of our clients, we manage about 150 associations, a lot of them downtown here in this area, and we received a ton of phone calls right after Surfside collapse. Hey, we need a referral to an engineer to do a structural inspection, and so that wave kind of passed, and now as a lot of our clients are facing budget season, that topic has come up again, right, as they're trying to peg their reserves and that sort of thing. If someone came to you today looking for a structural inspection, what kind of turnaround time are we looking at?
Yeah, so I don't like to push our size too much, but because we are a much more sizable company and scalable company than most of our competitors within the state, I typically have a proposal to you. You know, I like to say 2 weeks, but oftentimes I'll have it to you within a week. The boots on the ground within 3 weeks, and then a report once we finish our site inspection, a report probably within 3 to 4 business weeks.
Great. And then going back to the turnover inspection, because I know we've got a handful of folks who are here today whose community is approaching developer turnover, right? So you mentioned the turnover inspection. In the state of Florida, the developer, in a condominium at least, is required to provide a turnover inspection, but that's obviously at the developer's choosing.
That's correct.
So I understand from your earlier comments, you are advocating that the association have an inspection done as well.
Yeah, it's imperative that you guys don't rely on their information because you only have, you know, as we'll get to later on from Angus and Terry, you only have so many years to file a claim with the developer, and typically they're going to try and bankrupt that single entity LLC almost immediately. So you want to have a third-party neutral evaluation of the building for your own records, even if we don't find anything that's major. You want to have that peace of mind. You also, there are, just to elaborate on that, we do work with them routinely, and it is important, but it's also important for you guys for planning purposes. We talk a lot about the 558 claim, the construction defect claim, but the planning purposes are imperative because, you know, when you get, there's a thing called builder grade. Has everybody heard that term? Okay, so you know, all right. So you guys have paid a lot of money for these beautiful, for this beautiful piece of real estate in a very particular part of this city, a very beautiful part of this city. But guess what? You're all getting builder grade. I hate to tell you that. So whether it's waterproofing, it's painting, it's roofing, etc., you're getting builder grade. And so that for paint, let's use paint for example, because that's pretty easy. Paint and sealant around your windows, that's pretty easy for the average Joe to comprehend. So when you get builder grade on that, that building is painted, and by the time it's turned over, it could be 2, 3, 4, 5, 6 years by the time it's turned over, and that paint doesn't last on a normal paint schedule like 6 to 8 years on a normal repaint would, okay? You also have to have time for that building to find its home. It's got to find its place, even if it's built on pilings, if it's built on driven cast pilings, auger cast pilings, if it's built on a deep foundation system, it has to have time to move around, sway, settle, and you're bound to have some cracks, some chips. And that paint is not the highest quality Sherwin-Williams or Florida paints that they're using. And the reason why I say that, and also the caulking, you have a $5 tube of caulking, you have an $18, $20 tube of caulking. They're not using a $20 tube of caulking, ladies and gentlemen. Okay, they're using the cheap one, and this causes many areas, many hardships for the associations right off the bat because they're underfunded for this, number one, so they don't have time to prepare for it. They're playing catch up, and then they're also dealing with Right-Way Emergency Services, who's over to my right, because they have water intrusion. That paint is not a waterproofing system. It's settled, it's cracked, so now you have water intrusion into the unit. The caulking around the windows. You know, we have a temperature differential of 40, 45 degrees in season here, and all those materials go back at a different rate, and so that caulking fails and you start to have water intrusion again. So that's why it's important to have it done by a neutral third-party investigative company that focuses on forensics.
Great, thank you, Michael. Doug, Michael mentioned earlier that there's no legislation mandating reserve studies in the state of Florida, but there is plenty in the statutes regarding reserve funding and how that is handled. So talk to us a little bit about reserve funding in the state of Florida.
Yeah, and I'm going to politely disagree with Michael on the reserve study. From my perspective, and what I tell my board clients is you all have these obligations with respect to creating your budgets and funding your reserves, and regardless of what your professional background may be, none of you are doing this job for compensation. None of you are necessarily professionals. And I agree, ideally, the best reserve studies come from those types of professionals that have the engineering background. But at the end of the day, you can't make these numbers up out of whole cloth. You need to have some basis for your numbers. So while you're absolutely correct, there's no explicit language anywhere in the Florida Condominium Act that says anything about a reserve study. I think there are some backdoor arguments that potentially create an obligation on an association to do that, because again, you are obligated to have reserves as part of your budget. One of the exceptions to that is if your owners have voted to waive that or reduce that. I would add that that's not something that the board is required to offer to the members. It is something they can do. It is something they can potentially do on their own. But short of those events, your association is required each and every budget you adopt to have fully funded reserves. And to create an accurate budget and have fully funded reserves, you have to have some basis for those numbers. Additionally, with respect to financial reporting, you are required each and every year to provide a financial report to your owners within a specified time period at the end of the fiscal year of your association. That's set out in, I think that's in 718, 111, 13, or 718, 113. I don't recall which off the top of my head. But that also has some conspicuous disclosures with respect to your reserve funding. You are supposed to, in that financial report each and every year, disclose where your reserves were versus where they would be for fully funding. So again, you've got to have some basis for these numbers that you're disclosing to your owners. So while Michael's absolutely correct, there's absolutely no explicit requirement for this, I would posit that an association that is not doing that on some periodic basis and doing it ideally with professionals who aren't going to do the ground floor level 2-hour report are going to give you a reasonable basis to have those numbers, and that those are the numbers that your board arguably is required to utilize both in adopting your budgets and doing those financial reporting requirements.
And so provide some protection to the board because they've relied upon a professional.
Exactly.
Right.
Yes, absolutely.
Perfect. Michael, from an engineering perspective, what needs to change in the reserve laws here in the state of Florida?
A lot, really. I think the education, is important. Just education for the managers, for the board members. To understand the nuances from the statutes and from the different options possible. But I do believe that we'll move to a 5-year mandate. That's what we're being discussed now with various lobbyists and state representatives, so 5 years. We also have to incorporate, how long, what does fully funded mean, number one, and then how long do you have to catch up? So we can't say, well, you're not fully funded right now, but immediately next year you have to be fully funded. So we're going to have to determine what that looks like. We're going to have to, I believe, not by us, but I believe that they're going to look at the removing the waiving of the fully funded reserves, with the exception of certain criteria, such as you've just painted or you've just put a new roof on, and how long can you waive those fully funding of reserves? And I don't have that answer yet. That's just things they've been talking about. We're also going to look at who can perform the reserve studies. That's really important. We talked about the general accounting method, and we talked about the forensic analysis method of it, and who can perform these and on what type of structures. Probably, if you're a low rise, probably you'll get away with the general accounting method. If you're a mid rise to high rise, I believe that'll be removed. I think you're going to have a licensed professional engineer in the state of Florida with brick and mortar to perform this. There's just too much liability, too much exposure for them not to. And then the last one would be the national averages. Are the national averages going to be allowed to be used? For the funding and where they pull these like Marshall and Swift and RS means. Are these going to be Are these going to be beneficial to the association, and are they going to be allowed? Because the numbers are so drastically off from what our actual costs are to replace and improve via deferred maintenance or capital expenditures, that it really puts a hardship and is a detriment to the association itself. So I kind of think that they're going to move away from national averages, and you'll have to use more localized cost.
So we've hit on a number of actions that the legislature has either taken or we anticipate that they'll take. And this question is for either one of the attorneys. A task force was established by the Florida Bar Association to review the laws that regulate condominiums. What are legislators saying? What's the if you know the buzz coming out of Tallahassee, what is it? What's being considered?
Yeah, that is definitely a loaded question. I can tell you, for Rebecca, who assisted with that task force and was potentially going to be on this panel today, they're very interested in it. And the task force report actually came out about 24 hours ago. It's 170 pages. I've read about 20. Can't tell you what's in it. I can tell you there's a lot of recommendations in it. And I think, so there's that issue, but I think because legislators are particularly in tune in an election year, which the next session is, I think you can absolutely guarantee that there's going to be some hardening or firming up of standards for condos as a result of Surfside. I have no doubt it's going to incorporate a lot of the things that Michael discussed, and I think it's a no-brainer if for no other reason than where Surfside took place and how many legislators are down there. So you're going to touch on all of these issues. You're going to make it much more difficult, if not impossible, to avoid reserves. You're going to require a firmer standard for how you calculate reserves. You're going to do some sort of periodic inspection. I don't know about the 15-year requirement. I could imagine or envision that you might be able to segregate properties based on where they are approximate to the coast versus inland. Height, other factors might play some differentiation on what's required, but I think everything is on the table with respect to that issue. And what will come out of the sausage making process is anybody's guess, but I guarantee you this is probably one of the top 3, if not top issues that you can expect to be bandied about in the Florida legislature this upcoming year. I would also tell you with an election year that the legislative session starts a little bit early this year. It starts in January. So although bills are getting filed, to my knowledge, nothing's filed, but I think obviously anything was not going to be filed until this task force, which is just a series of recommendations. It's not a, it's about 12 attorneys that are, regular practitioners in this field, but, at the end of the day, they're making recommendations, and, what the legislature is going to do with those recommendations is, again, anybody's guess.
So if somebody in this room is unable to sleep tonight, maybe because of what we've talked about today, and they want to find this task force report, is there a place they can go for that?
Well, I'm privy to the report because I'm a member of the Florida Bar Real Property Probate Trust Law section, which served as the kind of overseer for the committee, and it literally was put on that committee's website. Again, I got an email at 4:30 yesterday. My understanding is it's probably also been transmitted to the legislature, so arguably at that point it becomes a public record, but how quickly you get it that way is a lot more difficult. So frankly, and Dave's got a copy of an article here. I don't know if there's an actual link to the report in that article.
They said no, not until it's reviewed.
Okay, so yeah, so at some point it's going to come out. It literally just hot off the presses 24 hours ago. I would guess within a week it'll probably get out in media and therefore be available some way, but at this point, to my knowledge, the only access I have to it is limited to Florida Bar section members that deal in this area.
And that'll give everybody a preview of kind of what is likely to come in the upcoming legislative session. Bradley, let's dive into your world a little bit. Another important reason to be proactive about your building's maintenance plan is to be able to discover construction defects that might be present. Bradley, what can you tell us about the laws that govern condominiums in regards to construction defects?
Good question. We have some existing laws, and we've made some reference to it here. We have the 558 process. It's a manner of notifying the general contractor, the developer who built your community of potential claims, allegations that there are construction defects. First thing you need to do is a preliminary site observation report. This is a visual inspection, and a lot of times it's believed that the manager can perform this function or the board members can perform this function, but in all reality, the only people qualified to do that preliminary site observation report are professionals. They're engineers, they're architects, they're people who can look at the building visually and understand what's going on with the building. So they create this visual site observation report, and that's what gets attached to this 558 notice we've been talking about. 558 is a requirement for anyone, any association that's going to file a lawsuit against a developer or a GC. This 558 process was set up by the legislature intending to be an alternative to litigation, like arbitration or mediation. It was supposed to keep cases like this out of the courts, make the courts more efficient, give the parties an opportunity to settle with the developer and the GC before filing a lawsuit. In reality, I can tell you that very few settle during the 558 process. It creates an impediment to filing a lawsuit, but it's not necessarily useful. It puts the GC and the developer on notice, ostensibly so they could offer to make some repairs, offer to pay, but very few of the claims for construction defect get resolved in the 558 process. So you send this 558 out, and it gives the developer or the GC or whoever you're sending the notice of claim, which is another way of putting a 558 notice. It gives them an opportunity to inspect, and the preliminary site observation report tells them where to inspect. It needs to include the location of the alleged defect, sufficient that the party you're putting on notice can go out and look at it. They need to know where geographically that defect is. And they also need to know the nature of it, right? They need to know if it's a roof leak, if it's water intrusion through the windows. They need to know the nature of the defect and the location so that they can address it one way or the other pre-suit. That 558 process is, and I think we'll go into it, they're trying to tack on to it. They're trying to add to it. And we'll talk about that as we talk about the legislation going forward.
Okay, that sounds good. So when the building inspections are being done, whether it's a turnover inspection or just a structural inspection that reveals some things, I know, because I think when people think construction defect, they're thinking that's something that involves the developer when the building was first built, but it actually applies to other work that gets done on the building in the future. I know we're working with a client who had the weep holes for their drainage system around the windows were caulked over at some point in time by one of the contractors.
Yep.
Okay, that's a construction defect issue, right? So when these building inspections are being done, what type of issues are they likely to turn up that should be cause for alarm for the board that might want them to consider talking to you about that?
So the ones of concern and the ones that I think that the engineer or whoever's doing the observation report should be looking for are corrosion of steel, corrosion of other metal, especially in coastal construction. You see this occur more rapidly than in inland construction. So you're looking for signs of corrosion of that metal. And you have to understand that if the steel corrodes, it's going to affect the concrete. It's going to make the concrete more vulnerable. And I think we'll talk about that as we go forward. You're also looking for invasion of salt, invasion of moisture, penetrating the building. It's inevitable by the coast. You're going to have accelerated invasion of salt and moisture because you're just closer to it. Inland, you'll have the same problems. They'll take longer to kind of manifest. You also have to make sure that the building in its current state is going to resist wind and flood damage. So you're looking for evidence that something happened, a hurricane, for example, a catastrophic event, and it can reveal construction defects that were under the surface until that event. So you need to make sure, and we need to make sure that the engineer is cognizant of the fact that not only has it got to prevent water intrusion and prevent corrosion of the steel, it's also got to be able to resist that hurricane force wind, that penetrating wind, and the problems that a building in Florida are going to encounter sooner or later. We look for water intrusion defects, and the engineer looks for water intrusion defects. They can come from several different causes, and they can cause serious health conditions, right? If water has intruded, if water has come around the windows, or you're seeing water staining, it's not long before you see mold growth in Florida. And mold is naturally occurring, and when you have moisture that's unaddressed in a building, you're going to have mold. And mold can cause long-term serious health implications. So we want to look for that water intrusion, we want to look for that corrosion of steel, we want to address that early on so that it doesn't lead to long-term problems.
So, and it's not just the buildings that need to be inspected, right? There's a whole realm of engineering, geotechnical inspections, where we look at the land that the building is built on. Michael, you want to talk a little bit about geotechnical inspections?
Yeah, so not many firms perform this. We happen to be one of them. There's a couple other local companies that do, but and essentially we are looking at, before the building is even designed, we have to come in and perform what's called a geotechnical analysis and subsurface analysis. So we want to look at, we have a drill rig, they're very expensive, they drill down to certain depths, 25 feet, 50 feet, 75, 100, 125, they go 25 feet increments, find out how dense the soil is, where the lime rock is, how far past it, and then we're looking to indicate what type of foundation this structure, this soil can be supportive of, and what needs to be put in. Is it a shallow foundation, for example, if the lime rock is very low or very high to the surface, or does it need to be a driven pile system, an auger cast pile system, and how many piles? And then there's a pile cap. There's structural columns that hold these large structures up. So we need to take a look at that, because that is, as mentioned, that's what holds up and provides the structural integrity of your building. And once you have that situated, it's pretty much there forever. So that's in the pre-built environment. In the post-built environment, there has been a lot of talk around this actually recently in Miami, basically from Miami up to West Palm Beach. It's probably a little bit of an overreaction at this point in our analysis, but we can come in and there's sound wave machines that we can put through and test the density of the soil that way. There's also a rig that is designed to push a steel rod 1 inch per second to test, that we can take readings from to test the density of the soil. The problem is it's very expensive to do these tests, number one, and typically there's other indicating factors that you have a problem, such as settlement, corrosion of the steel, concrete spalling, settling, you'll have cracking, you'll have wear patterns in certain areas, and things along those lines. So probably a little bit of an overreaction. And all these buildings are basically, we've performed geotechnical analysis on anything from, a 4-story, 3-story mid-rise unit all the way up to, 30-plus stories. So probably a little bit of an overreaction at this point, but I do understand why in Miami they're doing it. But I don't know what you do afterwards. That's like one of the things that we do is called specialty engineering. So you're looking for the root cause failure analysis, the mode of failure that was performed, especially in the Surfside. So when you talk about the legislation that's coming through, one of the things that we've advocated for, and we do a lot of this, and our firm was involved in the World Trade Center towers. We were the first engineers on site when that had fallen, bridge collapse, etc. Nuclear submarines. All kinds of stuff that we could go on forever. But you want to provide the mode of failure And you want to do this, you want to determine that, and once you determine that and provide the analyses, you want to go through in the scenario in a simulation of what happened, okay, and reenact this tower falling down and see if this was actually the root cause, okay, and if it's not, then you go back to the drawing board. So we'd like to see that, and then once there, you have to determine the corrective mode. And is it cost effective, or what is the mode the corrective mode, and is it cost effective, or where do we go from here? And I'd like to see a little bit more of that, especially from like the geotechnical side in that standpoint, from this area before we start just throwing a bunch of legislation at you guys and making you jump through hurdles or.
So if you were doing a turnover inspection, say on new construction out on Longboat Key, for example, is part of the turnover inspection a geotechnical, or can it be?
It could be. I mean, like I said, we have not. The thing is, not a lot of people have the expertise to do this. We could do it, but there should be other signs and indicators that this building has issues of settlement, and we'll see that over the course of several years as this building's been built. Because remember, you start driving the piles in, you put the pile cap on, put the structural columns up, and then you have, you could have 10 years, 12 years before these buildings are sold out. So we're going to look at the building plans. First and foremost, we're going to do our site observation, as was alluded to, and then from there, if there were, root cause, if there were root signs that said, hey, we believe that there's an issue here, then we would provide you with a follow-up proposal to say, hey, we need to perform this type of destructive or invasive testing for the association.
Bradley, I see you doing a lot of nodding down here during this section. So if what we refer to commonly, the common man refers to as the building is settling. So if there's evidence of the building settling, and maybe that evidence is discovered through a geotechnical inspection, maybe it's just visible, cracks, those types of things. Is that conceivably a construction defect?
Yes, absolutely. I mean, if you're experiencing crumbles, cracks, sinking, you need to be concerned. Buildings do settle. We've talked about it a little bit, but they're supposed to settle evenly. The builder prepares the earth under the foundation, and what they should do is prepare for that settling. They should be sure that when the building settles, because they're all going to at some point, that it's settling evenly. And so if you've got uneven settling, if you've got cracks, if you've got crumbles, if you can see evidence of sinking, it can certainly be evidence of a construction defect.
And this manifests itself pretty quickly. I mean, so like I said, we have 7, 8 set threshold inspectors. We work on count. We probably have 12 towers going at the moment. And specifically in Naples, there's a series of 5 towers. We've just finished the 3rd. We're working on the 4th. Actually, we're finishing the 3rd now. Working on the 4th. And as Bradley had mentioned earlier, there is signs of not only geotechnical but water intrusion, and the penthouse on this particular structure had water intrusion. The building had settled, it had shifted a little. We found signs of that, so we had to perform another geotechnical analysis. We reviewed all the documentation. There's extensive documentation for these geotechnical analysis that we can review, but you'll see several signs of water intrusion, puddling of water or pooling of water, and then there was asthmatic conditions from the homeowner who had gone to the doctor, the hospital several times. It wasn't like them. Did an analysis of water intrusion. We did a spray rack for the penthouse owner, and found water intrusion coming in that was not visible inside the walls down the concrete block, and had to tear the entire western facade of that unit up to repair it at the time.
I'd like to add to that. There are some more subtle warning signs too. Things you need to be aware of that you might not otherwise think are evidence of construction defect, evidence of the building settling. Doors or windows that don't easily open and close. You guys are seeing these things, and you need to be aware that doors or windows may not close for a number of reasons. but it may be related to that building settling. It may be evidence that a construction defect is manifesting. Cracks in walls and ceilings are obvious signs of it, but there's cracking in the flooring. It's not necessarily the flooring installer's fault. A lot of times this is due to building settling, this is due to problems, this is due to construction defect, and you need to be aware that some of these warning signs are really going to be larger problems than you initially think. And that's the time to get out and engineer. That's the time to do a geotechnical inspection. We believe those inspections are critical, and that you do have to get someone certified to do a geotechnical inspection. And at that point that you're experiencing these signs, you need to consider spending that money and doing that geotechnical.
And that's a great point, and then I'll be quiet. But the interior of the units, not all buildings will allow us into the interior of a unit, and that is a good telltale sign. Now we're specifically speaking about new construction here, and that is a great for a turnover process, construction defect. That's a great indication. But also structural condition assessments. I talked about the scope of work earlier. You have to evaluate the scope of work as board members and managers. One of the things where we have lost several bids, and I'll be honest with you, but I'm not willing, and our company has made a stance that we're not willing to waver from that, where we require entry into a minimum of 25% of the units. Some places that we've done work for Jeff have required us to enter 100% of the units. The association has required us to enter that. Instead of just doing ground level analysis. The operation of the interior doors, okay? The sliding glass doors, the windows, looking at the trim on the ceiling, looking at the baseboard, looking at the floor. Most of these units that we're going into don't have carpet throughout, so they have tile, and we can tell the cracking. You can tell cracking in the ceiling along the balcony. You'll start to see if the balcony is settling and there's a structural integrity loss in the balcony. You'll start to see that sort of sink from the building facade and lean forward. So you'll see a crack right along where your sliding glass door is. So it's imperative that you get inside the unit. And if you're not doing that, the board's done a good job at actually getting a structural condition assessment, but it's not the most thorough and investigative and fully detailed report possible.
Yeah, that's a great point. Doug, do you got something you want to add to that?
Well, I just got to piggyback on that and just point out that associations have a statutory right of access to units in certain conditions. So if you run into the thinking or the mindset that these are, sacrosanct portions of the building that we have no right to access, and that's your impediment to getting somebody in there to look at it, I would tell you the opposite. And that's 718.111 sub 5.
Thank you.
And that's an irrevocable right of access. My microphone isn't working. That is a guaranteed right of access by the association. So you need to be aware of that. The unit owners may protest, the unit owners may... The unit owners may...
I think we just lost sound.
Testing?
Testing.
It's mine.
I just wanted to piggyback on that. You do have the right to access the units. It's very important that you understand that. And as part of that process, you could put something in your documents that requires owners to give keys to the association. You can find people who don't. You can make them to provide you with current keys every time it's rekeyed. That way you do have access to the unit. We know many people don't reside in their units year-round, and the association needs to have an access to units whenever anything goes wrong or when anything is about to go wrong. So those are ways that you can guarantee that right of access so that you can do a real visual inspection that includes inside the units.
Great point. You've got the hot mic, so let's stick with you. The 2021 legislative session, there were a number of construction defect bills that were introduced, but all were defeated. Give us a little background on that and what's expected for 2022.
Does this one work? So I wish I could tell you that we expected no legislation or that we expect good legislation, but there seems to be a trend where we're trying to shorten the statute of limitations in which an association has time to bring a claim. Currently there's a 4-year statute of limitations, there's a 10-year statute of repose. We can get into that, but if the legislature shortens that period from 4 years to 3 years, they're limiting the association's ability to file a claim. And after the 10-year statute of repose is over, the developer and the GC are completely off the hook. So if construction defects are going to manifest in the first 10 years, you need to be looking at them if they're going to shorten the statute of limitations right away after turnover. You need to do periodic inspections before that statute of limitations runs. We've had developers and contractors do repair work, do warranty work, and then the day after the statute of limitations expires, they're gone. They're well aware of the statute. The board members aren't. They've got this shoddy turnover report maybe. They haven't hired an engineer to back that up with some good testing and good analysis, and you have less and less time to bring your claim. The other thing the legislature is trying to do, and happily was defeated this year, is, I already told you about the 558 process, but the 558 process is something that you're required to do before filing suit. So it stands between an association and a lawsuit to hold the developer and the GC and all their subcontractors responsible for the construction defects. The legislature is trying to put a process which precedes the 558 process where you have to bring a warranty claim. So now associations would have to take the time to bring a warranty claim. If that was unresolved, then they'd have to go through the 558 process. And then I already told you in real life that very rarely leads to a resolution of the issues. So then you got to go to litigation. And these laws are set up to hurt associations, not help them. And frankly, associations, their board members need to join and need to be involved in making the legislation, because the legislation is being made by builders, it's being made by developers, it's being made by contractors who have the ear of the legislators, and all of you are the ones that suffer. So part of what we believe is that you should get actively involved in the process and eliminate some of these things they're trying to do to associations to hurt, not help them.
I think I want to turn attention from construction defect to the other crisis that we're dealing with, particularly here in Southwest Florida, but really all over the country. Labor shortages, material supply chain issues, driving up costs, driving up, extending timelines for projects being done. Like in some cases, extending timelines just to get a bid for something. And that bid may not be one of those final bids. It may be, well, yeah, based on where we are today, here's the bid. But when we start the project 6 months from now, that could change. Michael, what can you tell us about timeframes? Is there relief ahead for this problem?
I think it's working. Is there relief ahead? Probably not. We're gonna say probably not. You know, we've seen you know, the labor crisis is not going away. We haven't seen you know, since the funding from the federal government for the unemployed individuals you know, was removed. We haven't seen any you know, any help as far as the labor is concerned. The materials are an extreme concern. Most people paid attention to paint, or well, I should say plywood was probably the most noteworthy last year. If you were doing a re-roofing project, you saw 100+% increase in the rate of plywood. That has since gone down significantly. Then paint went up because of the freeze in Texas and the destruction of the raw materials, especially from Sherwin-Williams. You saw that. You know, concrete block is up right now. We have some local contractors that are going to South Carolina and renting 18-wheelers and hauling it back because they can get concrete faster and cheaper that way. So I don't foresee that changing. Roofing, for example, underlayment right now. I heard from one contractor probably a week ago that the nearest underlayment delivery will be in April if they're lucky. So that could probably be like May.
Quick
I got excited.
Yeah, quick interruption there. What's really important, and I should have mentioned it earlier, as the insurance industry deals with rate increases, for all the reasons that we discussed, remember, appraisals are due once every 36 months. Many times, in some cases, some will get them once a year. But on top of the increases that we're seeing with budgets, just on the rate increases, there's another whole overlay because of appraisals. And I have seen appraisals increase anywhere from 7 to 12%. I think some of the folks that are in the industry of doing that would suggest the same thing. So we don't know the crystal ball for what the appraisal is going to provide. We get the numbers and we go out to the market with those. But when you're thinking about it, the rate increase is separate than the appraisal, and you have to factor that in as well.
Yeah, that's a great point. I think the biggest thing for managers and for association members is the planning process. You want to get an updated reserve study first and foremost. That serves as sort of your Bible, your holy grail when planning. And you should be planning for the next 5 years based off that reserve study. And then the other part of that is, planning, starting, we're sort of almost out of 2021 at this point, but moving in through 2022, you want to start planning now for any deferred maintenance or capital expenditure projects to at least get on the books for them, because the contractors are changing rates. They're only guaranteeing rates for 30 days typically right now. But you want to get in their queue and start planning for those, and that will probably, if it's the roofing, painting, concrete restoration, any of that will probably happen the second half of 2022. But you want to be really proactive if you're doing any projects for the next 5 years to start that planning process and engage with not only the engineer, but the bidding process with the contractor. You really want to start that 12 to 18 months ahead of time right now.
Can I have the mic? I'll piggyback on that. So what we're seeing really, in the shortage of labor and materials, we're seeing the perfect storm. COVID-19 stopped a lot of production and required a lot of government mandates where you have less than all of the employees working at reduced hours to produce these materials. Plus people were stuck at home. And there is a significant increase in remodeling projects and projects that homeowners are starting and associations are starting. And I agree completely that you need to budget out 12, 18 months. You need to be looking for that. But like we alluded to earlier, the prices are different 6 months, they're different 12 months, they're different 18 months. It's making it extremely difficult for board members and associations to properly budget for these. And so, in the light of the perfect storm, where there is reduced labor and there is greatly reduced materials, associations need to focus on their short-term projects. They need to allow the industry to kind of catch up so they can do some of their long-term plan projects. Beautification and non-essential projects, consider putting them on hold, because you're going to get into the middle of a project where you're renovating your lobby and you're not going to get the materials. The vendors are not going to have the personnel, the manpower. They're having a trouble finding qualified labor, and you're just not going to get your projects done timely. So you need to refocus on your short-term projects, your immediate needs, and you need to be understanding that projects are just going to take longer, they're going to cost more. Even if you budget, by the time you get to the project, it'll probably be even more than you anticipated.
And just to add on that, I guess the mic's not working anymore, but just to add on that, so the insurance companies are, which we've been a part of this, and they are pushing, whether it's to be proactive from a board standpoint. The roofing, for example, we've had several insurers come to us, or underwriters, and require that the roof is replaced in the 10th or 12th year. The painting, they're looking at the painting schedule. When was the last time that you painted? Instead of getting 10 years, the manufacturers are now, offering 10, 12, 14, 16-year warranties. The insurance companies are saying not so fast. They're saying you repaint on, a 6-year we had, for example. Well, that might not happen. We're behind the 8 ball from an association standpoint, and so they're either going to have to pay a huge premium increase or they're going to be dropped. So from a planning purpose, you really want to work with all the professionals. We're just a partner of the association, but you really want to include, the insurance, the attorney, for example, the contractor and your management company. It's really a team effort to make sure, because all of us have a different area of expertise, all of us are privy to different information, and the roofs, that the poor association was actually in Bradenton, they don't have the funds. They have a quarter of the funds to replace the roof. The roof's only 10 years old, and they have to pay, a monstrous premium, for that. We have another one in Marco Island that they want the building repainted in the 6th year. We can't get a contractor to do it in time. We can't get materials. So we're working through the insurance agent to try and help that. But it really is a team effort from from start to finish.
I want to get some final thoughts from you guys here in just a minute, but I know a lot of people have questions, right, that has been stirred. You guys all going to be here after this is over? Okay, so you'll have an opportunity. Depends on the question, right, as to who should buy the drinks. So these guys will be here to answer any questions that you might have, but I want to get some final thoughts and try and keep us on time so I don't get fired from this position. So somebody want to start? Bradley, you want to throw some, or whoever's got a hot mic, let's do that.
I had read this one article on tipping points, and I thought it was really interesting when I was thinking about this presentation. If you look at Hurricane Andrew and the impact on that, it was a tipping point for the Florida building codes. Then you look at 2004 and 5, when the multiple hurricanes danced through Florida. It was a tipping point for insurance. Appraisals were mandated. Mitigation reports were born. And other things happened. And then you have this situation here, and I can go on for an hour and a half just talking about the impact of budgets and what it does. I'm snorkeling now. I can scuba dive in a later presentation. And much of it was on engineering, construction defect. Surfside was a tipping point. A catastrophe that occurred when 98 people died, and it became a point of really where legislation will have to step in. And it is. What will happen 7 years from now? Who knows? There will be another tipping point. But we see things that have to happen, unfortunately, catastrophes, and then the legislation tries to get in. Jeff asked the earlier question, what will happen? I have no idea of the crystal ball, but they are trying to do something. And that hopefully will impact insurance, lower the insurance rates, maybe give us a better product that people are purchasing from a real estate standpoint, and help everybody. But the tipping point unfortunately occurred, and the ripple effect is just unbelievable. And I don't think it's just really a start to see what's going to happen, and hopefully all of us can be part of that solution rather than the problem. But it will impact everybody, and we just got to be ready for it.
I think a lot of new legislation is going to be helpful. They're going to reduce the certification process from 40 years to 30 years. Now I've heard 15. There's going to be good legislation. They're going to somehow limit Ford's abilities or members' abilities to reduce or waive reserves. But the diligence needs to come from the people too. When you're buying in a condo, when you're becoming a board member, you need to examine reserves. As much as the condo interviews new applicants that are going to live in the building, buyers need to interview their condos. They need to ask how the budget is. They need to see how the reserves are. If they've been waiving reserves for 10 years, you can expect a big assessment. It's gonna happen. And I also want to go back to the legislation. Not all legislation that's being born from this Surfside catastrophe is good legislation. There are forces out there, they are lobbying the legislature, they're trying to shorten the statute of limitations, they're trying to throw up obstacles to litigation against developers and contractors that give money to the associations to fix these construction defects. If they shorten the statute of limitations, they're cutting off a fourth of your time to make the claim. So you've only got 3 years after it turns over. So you need to get involved in the legislative process. You need to tell the legislature that these are not things that are helpful. They're not helpful to the members, they're not helpful to the associations, and you need to be involved in that process because the only thing they hear from is the builders.
Oh, okay. Well, I'm going to piggyback off of Brad. So I have a couple points. I think one, change is expected, obviously, and I think to sum it up as best I can, change is going to cost you money. Change is going to materialize in a lot of new requirements for you all, and those requirements will not necessarily be inexpensive. And in my experience with what I do representing clients, there's this inherent tension in a board member who's got to do and fulfill their fiduciary duty in managing the building and the responsibility that comes with that in terms of how you operate, how you structure your budget, how you fund those things, versus when they take their board hat off and have to pay assessments. That's just the inherent tension that comes with condominium living. You've got to do these things, but these things cost money, and therefore we have to pay for these things. So I think, especially at this time of year and setting budgets, which is where we generally are for most condominium associations across the state, I think regardless of the uncertainty of what the legislation is going to result in, what those requirements may be and what costs will be affiliated with them, I think associations need to be, I hate to say it, padding their budgets. I think you're going to have these requirements come into play in the next fiscal year of your association, and because you don't know what those are, it would be a good idea to have some money to set aside to account for those things. And I think you also need to start preparing your owners for that. I think if it's budget season, letting them know that you anticipate some changes, and even if you can't adequately explain what that line item is in the budget, I think you cover it in some way that's transparent and sets proper expectations that if we're doing our job correctly, that money is coming from you, and the costs, unfortunately, at this point in time aren't expected to go down. They're expected to go up. And then I think you also have to sell that. I think you have to sell that if there's opposition to that in the way that you're maintaining their building and their property. You know, the association doesn't own the building. The owners own the building. They own their units, and they own an undivided exclusive interest in the common elements of the unit. So at the end of the day, as a practical matter, and I'm not a real estate appraiser, the more money the association spends on maintaining that building, the better value there is.
So one of the things I would say is, is to be proactive and take ownership. Don't just wait for the legislation to come. David Luck, who was the president of ABC Supply, also ran Firestone Tires, who was in a board meeting with him, and his response was, I simply refuse to participate. And he said, I don't really care what comes, I take ownership, I take pride in where I live, and how it looks and the things that we do. You have a responsibility to fix and maintain and repair items of distress or defect, and that includes items that you should have known about. The issue in Surfside didn't happen overnight. I can guarantee you that. We have the engineering reports for that from 2018. This is, and by the way, that 2018, okay, so everybody heard that. It was in dire straits in 2018. It took 10 plus years for it to get to that point, okay? So you don't have to fix everything and bankrupt yourselves overnight, but you do have a responsibility to start to plan now, okay? And move forward and put that plan in place just as you would in business and in life to fix and maintain and bring these associations back up to life or to maintain them in the appropriate manner. So as David Luck said, refuse to participate in whatever's coming. Be proactive yourselves and maintain them. And then lastly, I'd like to thank Jeff and the DSCA for putting this on. all the sponsors, and most importantly, I'd like to thank all of you guys for coming and educating yourself, because that is, knowledge is power, and that is the best thing that you guys can do, is just continuously educate yourselves on what's coming and on how to best run the associations.
Great, thank you. Thank you guys for sharing your knowledge with us, your advice with us. It's been invaluable. I know a lot of people will want to connect with you after this is over. I want to thank the Downtown Sarasota Condominium Association for putting on the event, the events planning committee for planning this event, and I'm going to hand it over to